practitioners and stakeholders to transform mentees into mentors and leaders of the next generation, to facilitate further mentorship, internship, scholarship, and job placements for the mentees. That's what we are all about. And I'll be giving us the announcements for today, which is registration for the next quarter JIIPCC mentorship and internship program is currently ongoing. I'm trying to share my screen, please pardon me. So you can kindly tell your friend about it and register with the link. 30 minutes session, private mentorship and internship session is also available if you want to talk to any mentor you like and have a 30 minutes private session with the mentor. The JIIPCC end of the year party registration is currently ongoing. The registration link has been sent to your WhatsApp group, so you can register through the link. That's for people in Abuja. Then finally, you should all edit your name session in your Zoom app. Put up your video because the meeting today is being live streamed. And I'll be reading out the mentor's profile now. The first mentor for today is Mr. Folarinwa Aluko. Mr. Folarinwa Aluko is a legal practitioner and partner in the firm of Turam Rockford Solicitors, where he provides advisory and consultancy service to companies and a wide range of creators, users, and startups. Folarinwa is the director of the Intellectual Property Institute Nigeria. He is the chairman board of trustee of the Intellectual Property Lawyer Association. Folarinwa is a member board of trustee of the Sports Lawyer Association of Nigeria, as well as a member of the board of the Nigerian Digital Chambers of Commerce. Mr. Aluko is also a board member of the Songwriter Association Nigeria with a background in ICT hardware and digital forensics. Folarinwa has led legal team to champion consequential strategies impact public interest. He litigates in the IP space since 2012. Folarinwa is a consulting mediator with commercial intermediate and ADR firm based in Lagos and Abuja. He is a thought leader in the Nigerian innovation, technology, intellectual property, and entertainment space. The second mentor for today is Mr. Lucien. Mr. Lucien Xavi Pierce has 22-year-old of post-qualification experience after serving artificial. Lucien spent 2 years in London, where he was seconded to telecom and IT law firm Baird and telecom multinational cable and wires. Lucien deals with contentious and non-contentious aspects of commercial law and focus on the regulatory aspect of telecommunication, media, technology, and FinTech. Lucien advises local and international clients on telecom, licensing, data privacy, media, and IP law. His educational background is University of KwaZulu-Natal, BCom, LMB, University of Strathclyde, LLB, IT and Telecom, Oxford University Side School of Business, FinTech program, World Intellectual Property Organization, WIPO, Advanced Certificate in Intellectual Property. So we'll be moving next to the next thing in our agenda, which is presentations from the mentees. So we'll be calling on the group one presenter for today to share his screen and kindly unmute himself and start the presentation. Group one presenter. Group one presenter, are you with us?
Yes, I am. I'm sorry. Can you hear me now?
Yes, we can hear you.
Okay. Good evening, everyone. I'm sorry. Good afternoon, everyone. My name is Jimo Fatia, and I'll be presenting for Group One. I'll be sharing my screen now so that we can all see it. Can you see my screen now?
Yes,
Yes,
we
can
we
I?
can see you.
All right. Thank you. So our topic is FinTech policies, regulations, and government actions. And then we'll be starting now. Why do we need to regulate FinTech policies? Generally, FinTech has provided the opportunity of making financial services accessible to a large percentage of people. This is through the availability of mobile phones, in which GSMs recorded 49% penetration in 2020. People can now access financial services at their comfort, at their comfort at their comfort zones. The popularity of fintech can be harnessed from its growth from 16% to 20 in 2015 to 64% in 2019, with a spontaneous increase during the COVID-19 pandemic. Therefore, there was an urgent need to regulate fintech, in which, in order to sustain its relevance in the market, in the market. Also, the regulators of fintech policies are also eager to regulate it in order to manage the risk associated with the expanding fintech institution. Similarly, it is necessary to regulate it to give the best quality of service to the humongous consumers, because the technology associated with fintech keeps evolving. The historical background of fintech regulation. The historical background of fintech regulations and intervention of the government can be traced far back to the inception of fintech around the late 19th century. However, a more pronounced regulation and intervention of government policies came in the 21st century, especially in 2020 during the COVID-19 pandemic. This is because of the rise in this is because of this is because the rise in fintech that this is because of the rise in fintech that demands an urgent, effective, and efficient regulation. Government actions towards fintech policies. Government partake in fintech policies to give the best of financial services to consumers, businesses, and to promote the economy of the nation. The various actions of government towards fintech policies will be highlighted below. One, mass availability and accessibility. Governments partake in fintech regulation by making it accessible to a large number of people in the country with conveniency. This also includes those in rural areas who have less access to fintech services. Two, promoting efficiency. Government partake in fintech policies by improving the efficiency and making it robust in order to give the best to consumers, businesses, and foreign investors. This has made fintech services relatively easier, as we have things like real-time payments, appealing blockchains, etc. They also help in managing risk and compliances associated with fintech. Modification of legislation. Government modify the existing legislation to enact new and better ones. They can partner with lawmakers to achieve this goal. For partnering with fintech startups, it is never a work in isolation. They join hands with fintech startups, relating with them to get more knowledge on fintech management and the risk associated with it. 5, partnering with government organizations. They also partner with other government organizations that are involved in fintech, such as the Central Bank of Nigeria, the Securities and Exchange Commission (SEC). This is to enhance research and increase their insights on fintech. Granting of tax incentives and grants. Government grants tax incentives to fintech startups through tax holidays. This is the exemption of some financial institutions from paying taxes. Also, they assist financially by granting loans, especially to the new fintech institutions. Other regulations on fintech policies. The Central Bank of Nigeria. The Central Bank of Nigeria issues licenses to all banks. They perform their tasks according to the Banks and Other Financial Institution Act, BOFIA 2020. There was the issuance of Open Banking Framework in February 2021. The aim of the framework is to create a unified customer approach system for banks and financial institutions. Also, the CBN partnered with the Nigeria Interbank Settlement System to introduce the launched innovative sandbox by Financial Services Innovators (FSI). In July 2021, there was the issuance of the approved sandbox operations framework, and there was also the introduction of global standing instruction agenda by CBN in July 2021 to improve credit payments. The Securities and Exchange Commission, they operate according to Investment and Securities Act 2007. In 2017, SEC issued a public notice on investments in cryptocurrencies and other virtual digital currencies. There was the rules on crowdfunding in 2021, which gave permission for private companies to raise capital from the public through crowdfunding, which is associated with FinTech. Also, in May 5th, 2021, SEC issued its proposed new rule of robo-advisory. This is to provide financial management services to FinTech companies. The National Information Technology Development Agency (NITDA), they issued a draft framework on the national blockchain adoption strategy in October 2020. Other regulations on fintech policies continued. The Nigerian Deposit Insurance Corporation (NDIC), they help in ensuring all deposit liabilities of banks and financial institutions in Nigeria. All banks saving deposited money in Nigeria must be registered with the NDIC according to the Section 15 of the NDIC Act 2006. Other regulators of fintech in Nigeria include the FCCPA, that is the Federal Competition and Consumer Protection Act, the Nigerian Communications Commission, which is enacted by the Nigerian Communication Commission Act 2003, the Companies and Allied Matters Act (CAMA) 2020, Investment and Securities Act 2007, NICOM Act, and the Nigeria Data Protection Regulations 2019, amongst others. There are different challenges that affect regulation and government actions on fintech policies. Some of them include the absence of a unified legislation on fintech, because we can see that the CBN has issued different regulations that guide the fintech industry in Nigeria. Then there are multiple regulators on fintech, and for example, we have the CBN, we have the SEC, we have the National Data Protection Regulation. The lack of effectiveness in their work and insufficient funds for carrying out tasks. What is the way forward? The passage of fintech bill should be enforced to ensure a uniform law governing fintech in Nigeria. There should be implementation of such laws. In conclusion, regulations and government actions are needed for regulating fintech policies. There should be more innovation of these regulations and government actions for innovative fintech policy and fintech policies. Thank you for listening.
Thank you very much.
Yes.
Thank you very much, Jimo Fatai. That was a very brief and detailed presentation from you. So we'll be calling on Group 2 presenter. Share your screen and also unmute yourself.
Good afternoon. Can you hear me?
Yes, we can hear you.
Okay, I'll be sharing my screen in a minute. My name is Oluwaseun Nike, and I'm presenting for Group 2. Give me a minute. Let me just share my screen. Okay. Can you see me?
Yes, we can hear you.
Okay, I'll start in a minute, please. Okay. Okay, once again, my name is Nike, and I'll be presenting today on FinTech policies, taxation, and the burden of compliance. FinTech policies, taxation, and the burden of compliance.
Okay, I think we can't hear you. Are you still here with us? I think he's having a network issue. So who is the backup presenter for group 2? Okay, I will be reading the profile of the last mentor for today, and we'll be waiting for him to get back to connect back to the meeting. So the last presenter for today is mentor for today is Mr. Joseph Obo. Mr. Joseph Obo is leading an expansion project for foreign partnership for Nigerian company, an online company registration platform, which presently has delivered over 1,500 incorporations for clients both in Nigeria and abroad. He is presently the group board secretary of Bethsaida Africa Development PLC, an investment and financial service company based in Nigeria. He is a mentor and a moderator for the FinTech JIIPCC Mentorship and Internship program. Joseph has an LLM in Information Technology and Telecommunications Law from Strathclyde University, Glasgow, Scotland, and has attended several courses across Europe, Asia, and Africa. He also consults for companies on boardroom meetings. Thank you for joining us today, Mr. Joseph Ogo. So we'll be calling on Group 2 presenter if he's here to complete his presentation.
Okay, the backup presenter, the other presenter is having network issues, so I'll be sharing my screen shortly.
Okay.
Sorry, just a minute.
Okay. Hey, Aurika, are you still with us?
Yes, I am, please. Sorry.
Okay. Are you trying to share your screen?
Yes, I am.
Okay.
Don't feel pressurized, Miriam. We all have technology issues, so yes, take your time.
Thank you, sir.
Okay, thank you, sir.
Well, I guess while we're waiting for Mariam, we can be listening to Mr. Lucien comment on the first presentation so that we can use the time wisely while we're waiting for Mariam or Group 2. Hello, Mr. Lucien. It's so good to see you.
Likewise, Julia. Thanks again for the opportunity to take part in such an important initiative. I have an old saying, all that is not given is lost. And it's always a pleasure for me to take part in something like this and share, and similarly learn from all the mentees as well. So yes, I'm very excited to be on this second session. But I think it looks like Miriam is ready. Shall we allow her to go ahead and then continue afterwards?
Yes, please. Thanks, Lucien.
Welcome.
Okay, good afternoon, everybody. So I'll be presenting for Group 2, and our topic is FinTech policies, taxation, and the burden of compliance. Okay, so FinTech policies in Nigeria. The financial technology industry is rapidly developing in Nigeria, but despite this, there is no single legislation regulating FinTech in Nigeria, nor a FinTech specific statute in force in Nigeria. However, there are several existing regulations and enactments that apply in the FinTech space. The Central Bank of Nigeria is the principal body responsible for maintaining financial stability and integrity in Nigeria. To this effect, it issues guidelines and regulations for the monitoring of financial services. These guidelines are many and guide different aspects of the FinTech space. These regulations seek to ensure an effective financial system for the settlement of transactions, including the development of electronic payment systems in Nigeria. These regulations also leverage technology to promote financial inclusion and enhance access to financial services. It should be noted that attempts have been made to regulate the tech ecosystem and enact an all-encompassing law regulating the tech space. This has culminated in the passing of the Nigerian Startup Bill. The bill contains some important amendments which are critical to the advancement of Nigeria's tech ecosystem. This bill will be discussed in detail over the course of the presentation. Okay, taxation and burden of compliance. Today's corporate tax laws are not fit for the realities of modern global economy and do not capture business models that can make profit from the digital economy in a country without being physically present. Extant tax rules are not able to cater for the expansion of commercial activities that have been brought to bear through the emergence of digital economy and the functions that users play in generating value for companies operating in digital space. As a result, there's a disconnect or a mismatch between where value is created and where taxes are paid. Hence, the digital economy has necessitated a major overhaul of the brick and mortar ways of doing business, which has led to global transformation. Digital economy no longer needs introduction. We will therefore not be spending time trying to define neither the term scope nor coverage, but its persuasiveness and disruption of established business norms. The financial technology ecosystem is undoubtedly a part of digital economy, as the innovative products and services provided by fintech companies transit borders and can easily be accessible across several states and countries that take PayPal, for example, or Flutterwave. Financial technology has led to the convergence of various industries, thereby creating a horizontal economy, making it impossible to ring-fence fintech as a separate and independent sector. Thus, there are no separate tax laws directed at fintech companies. Separate laws regulating different sectors and specific tax laws directed towards specific sectors are not useful following the advent of fintech, especially as it has resulted in partnerships and collaborations among these different sectors. For example, online lending platforms providing access to credit are not subject to tax laws because such platforms are not regulated under banking laws provision on taxing interest. In the absence of law and regulations specifically dealing with those transactions, defining the tax base for fintech and its regulated activities becomes quite complex. For the purpose of taxation, fintech is categorized either as a company or a financial institution. Thus, all the tax laws regulating companies in Nigeria will be applicable to a company, financial institution would be applicable to a fintech company resident in Nigeria. And fintech companies are either classified as non-financial institutions or financial institutions. The laws applicable to fintech companies include the Companies Income Tax Act, Stamp Duty Act, and Value Added Tax Act. Traditionally, income taxes are premised on structure, and it is impossible, and its imposition is limited to the geographical location of a taxable entity, with the basic considerations of the source companies are based on some form of connecting factor, which determine whether the entity will be liable to tax within a particular jurisdiction. Section 9 of the Companies Income Tax Act expounds on this by subjecting all profits of
of any Nigerian company from any trade occurring in, derived from, brought into, or received in Nigeria to companies' income tax. It should be noted that with the advent of Finance Act, companies operating in the digital space without a fixed base in Nigeria have been brought into the tax net and can now be subject to tax. This is necessary as both intra-border and cross-border digital transactions generate significant revenue for non-resident companies operating within the digital space, with the leisure effect on the taxation regime around the globe, and Nigeria is not left out. Section 4 of the Finance Act 2019 amended the provisions of Section 13 of the Companies Income Tax Act. And so Section 13, sub 2, paragraph C and E now provides that the profits of a company other than a Nigerian company from any trade or business shall be deemed to be derived from Nigeria. Paragraph C of the section says, if it transmits, emits, receives signal, sound, messages, images, or data of any kind by able radio, electromagnetic system, or any other electronic or wireless apparatus in Nigeria, in respect of any activity, including electronic commerce, application store, high frequency trading, electronic data, storage and online adverts, participate in network platforms, online payments, and so on, to the extent that the company has significant economic presence in Nigeria, or profits can be attributed to such activity. Paragraph E reads, if the trade or business comprises the furnishing of technical management, consultancy, or professional services outside of Nigeria to a person resident in Nigeria, to the extent that the company has a significant presence in Nigeria. Broadly speaking, companies in the digital space are treated as non-resident companies and are thus taxed in Nigeria based on the significant economic presence rule. The SEB is thus the connecting factor for determining whether a digital service company or a foreign company without a fixed base providing services of a technical nature will be liable to companies' income tax in Nigeria. In the exercise of its powers provided in Section 13, sub 4 of the Companies Income Tax Act, the Nigerian Finance Minister, by an order dated 10 February 2020, published in the Federal Gazette, the Companies Income Tax Significant Economic Presence Order 2020, hereinafter called SEP Order, in a bid to define the SEP principles and aid its implementation and enforcement. The SEP order provides separate SEP thresholds for e-commerce and digital services company and services of a technical nature. It provides that where an e-commerce digital services company derives gross turnover or income of more than 25 million naira or its equivalent in other currency, it uses a Nigerian domain name, e.g., like there's the domain name ends with NG, or registers a website in Nigeria, or has a purposeful and sustained interaction with persons in Nigeria by customizing its digital page or platform to target persons in Nigeria, including reflecting its prices in Nigerian naira. Then such a company will be liable to tax in Nigeria on its income derived from Nigeria. In determining whether a company meets the threshold, the order takes the activities of connected persons into account. Connected persons in this context refer to the connected persons are defined under the Companies and Allied Matters Act, or persons that are business associates in any form. One person, i.e., one person participates in the management, control, or capital of the other, or the same person or persons participates in the management, control, or capital of both enterprises, either directly or indirectly. The SEP order creates a new taxing right that focuses on value creation rather than source. There is no requirement for physical presence, and all that is required is a purposeful and sustained interaction with persons in Nigeria or significant economic presence in Nigeria. Even though the Companies Income Tax Act and the SEP order mention NRC broadly, it seems that the target scope of this new tax right is those data-driven platform-based or consumer-facing business models. To a large extent, the NRCs in scope are digital businesses and fintech companies fall within this category. Then the Nigerian Startup Bill. A discussion on fintech policies and the burden of compliance will be incomplete without making mention of the Nigerian Startup Bill. The bill seeks to cover tech companies, including e-commerce platforms, foreign digital species targeting the Nigerian market, like Amazon and Netflix, and fintechs or companies providing financial services using information technology tools. The NSB is a joint initiative by Nigeria's tech startup ecosystem and the presidency to harness the potential of Nigeria's digital economy through co-created regulations. One of its objectives is to bridge the engagement gap between startups and regulators. Undoubtedly, the bill contains some important amendments which are critical to the advancement of Nigeria's tech ecosystem, such as tax incentives to startups. Recommendations and conclusions. The regulatory framework for fintech is uneven, fragmented, divergent, and overlapping patchwork. The fintech sector is regulated by multiple government regulators. Relatedly, this method of regulation impacts the taxation of fintechs. Sound regulation addresses those fintech-related activities that reconciles the interest of these companies with those of society. A sound taxation system for fintech will result in the generation of revenues to finance public services that will improve development and aid in meeting other social goals. Without a sound regulatory system, it will be difficult to identify the activities upon which tax can be imposed. It is important to note that the passage of the Nigerian Startup Bill is sacrosanct to the development and evolution of the fintech ecosystem. Not only does it provide tax incentives and other benefits to the fintech space, it also ensures the existence of a legal framework for the regulation of financial technology in Nigeria. The lack of a body of rules guiding the fintech space has also led to tax evasion by fintech companies, especially non-resident companies in Nigeria. It is important that a legal framework for taxation of this space is provided for. Thank you for listening.
Thank you very much, Miriam, for that beautiful presentation. So we'll be moving to our mentors now, mentors' contribution. But firstly, Mr. Folaniwa Aluko for joining us. And I think Mr. Folaniwa, he missed the first group's presentation, which is about the regulations and government actions on fintech policies and regulations. And okay, we'll be giving it to Mr. Lucien now. Mr. Lucien, we'll be hearing your contributions. Please kindly unmute yourself. Okay.
Great, thank you, Hussein, and good afternoon to my colleagues, Mr. Obo and Mr. Folarinwa. It's good to be on the same platform with you both again, particularly Mr. Obo, because he and I come from a very prestigious institution, Strathclyde. I was there in the early 2000s when tech law was just taking off, and I'm sure what you studied is probably far more advanced than the rudimentary stuff I studied then, but well done on choosing that institution. I really enjoyed the Group 1's presentation. From indeed, a big clap for Strathclyde. I really enjoyed Group 1's presentation. As a lawyer, what I observed was that they were very, very thorough in citing a broad range of regulations and laws that would typically apply to a fintech type of organization. And from issues such as privacy to consumer protection, I saw legislation, the group touched on legislation that would deal with aspects such as consumer protection and data privacy. And the reason I raise that is because your typical fintech is going to be operating in an environment where it's quite divorced from or distant from the users of the service. And in setting up their business, they're going to need to comply with quite a few laws in providing their services. One of the aspects that was also raised was that they are likely to also operate beyond borders. And that, again, is critical to the consumers, the users of the services, because if the fintech is based in another jurisdiction, there is a strong chance, I mean, not all fintechs are fraudsters, but there is a chance that fintech is outside the jurisdiction of Nigerian courts and other tribunals. And if there is a problem, they might be out of reach, and the consumers using their services might not be able to take action against them. So I was very pleased to see that those particular aspects were addressed in terms of the list of legislation towards the end. What I would recommend, however, for Group 1 is, as thorough as your explanation of the applicable laws is concerned, I would suggest that, or I would have recommended that you perhaps look at some practical examples. And one of the ways that I find that I convey concepts and regulations and how they apply to a particular fintech or a particular type of service is by starting out with a scenario or a case study, even if it's a hypothetical one, and saying, imagine this particular fintech providing this type of service. Its offices or its location is in Nigeria, and then you proceed from there and apply some of the laws that you mentioned, and that brings a practical dimension. Especially, imagine if you are pitching perhaps for finance for your particular fintech, your ability to tie your services to compliance with those laws makes you look a lot better in the eyes of a potential financier or venture capitalist. So I would suggest, yes, very thorough analysis and explanation of the applicable laws, but try and apply those laws to your fintech. So, for example, you might say, okay, this fintech hosts its data in Ireland. What are the issues that relate to jurisdiction and to outsourcing and the applicable laws in that instance? Taxation, you might deal with that as well and say, well, because it's operating in another country, these are the potential consequences that arise. But I must say it was very thorough. As a lawyer, looking at it, you traversed all the areas that I think apply to a fintech such as this. A comment that I do have is perhaps also consider circumstances, or I would have discussed two different scenarios, because the idea is, how do you regulate fintechs sufficiently well? And I would perhaps have also touched on the difficulties that are faced in circumstances where you have a fintech that is equivalent to a super app, if we can call it that. To give you an example, you might have a service like PayPal that essentially just provides one service. It's a fintech, and it provides the ability to pay and receive funds. However, you might have a different service, and we call this a super app, such as WeChat. And WeChat will deal with anything from financial services to actually providing a marketplace or providing social interaction, much like many of the other social media sites like Facebook perhaps would do. And that is a super app where you have these various services and various issues that could arise under that one particular fintech, if we can call it that. And I would have highlighted that, in that sort of circumstance, there is a difficulty that arises because you're dealing with a much broader range of issues than would apply for your typical fintech, such as PayPal, which only deals typically with financial services. So yes, I would have suggested touching on that. But overall, a very thorough presentation, Group 1. I appreciate it, and I learned a lot about the applicable laws in Nigeria. Now, I enjoyed Group 2. Group 2, you were a lot more practical, if I can put it that way. You touched on issues that are pertinent to fintechs. What stood out for me was that you highlighted the fact that many of the current laws are outdated and to a certain extent make it difficult to regulate fintechs because they were crafted and drafted in circumstances and at a time when you didn't contemplate fintechs and the services that they provide. The next issue that you highlighted and that came clearly across, which is something that I mentioned for Group 1, is you spoke about the issues that arise because of the potential for cross-border operations. So it was good that you raised that, because the reality is that fintechs are likely to have operations that cross many jurisdictions. A typical feature of a fintech is because they want to keep their costs low, they invest in less infrastructure and typically outsource much of the services that they require, whether it be hosting or whether it be programming or IT-related services. Those are outsourced. Consider a fintech that is hosting its data perhaps in the United Kingdom and is outsourcing its programming perhaps to the Philippines or to India. There you have multi-jurisdictional issues that raise aspects of privacy and perhaps also your tax laws as you highlighted. The other aspect that, I'm sorry, I'm just going to look at my notes here. Yeah, I thoroughly enjoyed your in-depth explanation of significant economic presence, and what it immediately brought to mind for me was similar definitions of how something becomes a significant economic presence. Because if you look at GDPR, the General Data Protection Regulation, the way it defines its scope and to whom it applies is also very broad. Whether you are targeting somebody in the EU, much like you said, whether you're targeting services in Nigeria, there are similarities behind that. So I was very pleased to see that you touched on something that is familiar to me. You also highlighted the fact that there's no single piece of legislation, which is actually critical. You went on towards the end to talk about the need for a single piece of legislation. I think it is, hypothetically, it's a great idea. But in surveys that I have seen, and if you intend pursuing this particular study even more, there's a very, very good report that was done by a working group that I have at times attended here in South Africa. It's called the Intergovernmental FinTech Working Group, IFWG. And they put out a report in June of 2021, which dealt with fintechs and regulation of fintechs and the typical issues that arise regarding them. And one of the important things that came out of that, because they did a survey with about 70 new fintechs that had set up here, was that about only 37% said that they required or recommended a fintech-specific law. The balance, which is 73% or somewhere there, 73, whatever, I'm bad at maths, but the bulk of all those who were consulted felt that there were sufficient laws that allowed them to regulate their business sufficiently, and they did not see the need for an all-encompassing one fintech type of law. So I typically, I tend to agree with what they're saying. It's going to be too difficult to contemplate every single scenario that fintechs are going to operate in, particularly if you consider the super app types of fintechs that provide multiple types of services, whether it be delivery, payments, and some other services on one app, and you're going to struggle to provide one regulation for them. My view is that it's going to be very difficult to have one piece of law. I would love to see the eventual law that comes out that you mentioned that is being drafted. I think you mentioned it as a startup law. But overall, as well, I really enjoyed yours. Yours had a more practical element. The way you dealt with the applicable regulations was more focused in terms of tax. And perhaps you could have touched on some of the others that the other group touched on, such as data privacy and consumer protection and that. But overall, both very, very good in their own way and very thorough and very educational for me. So yes, thank you for that. I thoroughly enjoyed both, and I'm certainly, if you don't mind, I'll credit you, but I'm going to certainly be quoting both your presentations in some of the work that I'm going to do in future. Thank you for that.
Thank you so very much, Lucian. Thanks a whole lot. Listening to the presentations also has been quite helpful. The Group 1 presentation, as well as that of Group 2, especially with respect to the mischief that the startup bill intends to cure, to ensure that fintechs, or tech companies who have a startup status, which the bill talks about, can enjoy the benefit of the cross-divergent regulatory processes or practices from different regulators within the fintech space. So that bill is actually trying to bring about a pool of resources that startups can actually benefit from, so that instead of having to, maybe you are running to Securities and Exchange Commission on day 1, you are going to CBN day 2, you are going to NIMC day 3, you are going to NITDA, all of these agencies are actually put within one pool so that a financial tech company or a startup or adventure can actually walk into one place. It's like a one-stop shop of some kind that would give a lot of usefulness to what startups or tech companies are actually doing. I know Mr. Folari definitely is here. I will just quickly call him up so that he can add more life to the presentations, especially for Group 2, and he can also add more of his views as well to the presentations. Mr. Folari Aluko, please, you are up now.
Thank you very much, Joseph. My apologies for joining a few minutes late. It's I think we had the power issue here, but then again, Nigeria. So what can I say? I think one of the things, well, it's interesting to follow Mr. Pierce, Lucien, and I think he has covered the field, as we will say. And so I listened to, I caught part of the presentation from Group 2. Kindly permit me to, the lighting where I am is a little off. So if you don't mind, I'll do this, but my video will come on subsequently. But I was saying that Mr. Lucien really has covered the field. And from part of the conversation the presentation that I caught, I do agree that there's something to be said about looking at some practical case scenarios for, when having these conversations about fintechs, because I think the phrase, the word fintech or the term fintech really doesn't do much justice to the range of services that are offered or that are captured under this umbrella. That's why I think Lucien was talking about, the super apps like, all the super apps like WeChat, or like even to an extent, maybe in Nigeria, like a Flutterwave, but that does quite a number of things, offers payment processing, that provides switch services, and so on and so forth in Nigeria, or like any of the regular fintech apps that do provide savings functions, help people with their personal finances, and then provide some kind of insurance services, and so on and so forth. Because there's such a wide range of services that fall under this heading of fintech, quote unquote, it does help to contextualize these conversations using specific case studies, and I will piggyback off that to posit that I don't think it might be a very good idea to have a single legislation that seeks to create or to address some of the issues that relate to the tech industry or to the fintech sector or the fintech space. I took a very quick look at the IFWG report, something like that had come up on my radar, I think about 6 months ago or so. But I think it's also very important for those of us or people in the fintech space to highlight the need to also conduct surveys and engagements such as this to find out what the take of the general population is. The unbanked population, or persons who don't have access to formal financial services. Nigeria, I think at the last, no, I will, let me not, I'm also a little bad at math, so forgive me. But that we have a large percentage of our population currently doesn't have access to formal financial services. And from experience, our laws tend to create unintended consequences that have a negative impact on the people that these laws seek to help. And I can cite like 1,001 laws, from anti-discrimination laws, all sorts of laws, Violence Against the Person Prohibition Act, that don't necessarily have the intended effect, because either the process of legislating was rushed. It was compared to like the Administration of Criminal Justice Act. That was rushed legislation, and at the end of the day, we end up with a situation where their jurisdiction, area courts still have criminal jurisdiction, or it's just magistrate courts, and then the section on appeals only deals with appeals from a particular type of court, and so on and so forth. I would guess that there will be more people who would weigh in against having a single one-size-fits-all regulation for the fintech industry or for the fintech space. But I think there's a general consensus that issues of data privacy, issues of consumer rights, issues that are centered around access to certain types of services and access to information about those services, such as investment-related services and so on, are very key. And I think those are issues that kind of cut across almost all companies that operate in the fintech, in the quote-unquote fintech space. So I would say there should be some more focus around addressing some of the regulatory bottlenecks in those areas, in my opinion, for Nigeria, that is. And I'll give an example. Today, just this morning, I gave somebody a copy of my national identification number slip, passport photograph. Now, this document, I'm applying for something, but then I had to give it to a third party who will then put it in the application and then submit it to the regulator. And I'm wondering, I'm giving people my information, only God knows, or who knows what this person can do, with that information. This idea of data privacy, data theft, and even the process of handling data taking or information from the public. There's this very famous quote that if a product is free, then you are the product. And you find that a lot of the time in the text, many fintech, I saw some adverts last week, and they were saying, "Oh, free transfer. First 50 transfers are free." And you're asking yourself, okay, so what's the catch? Where's the stick? This is the carrot, but where's the stick? And so there's a huge need to have that national conversation about, okay, what should data protection, what should our approach be to data protection, handling people's information on a national scale first, and then on a state-by-state scale, then we can now start talking about, fintech space and all that. But I think the presentations also captured, to a very large extent, many of the major challenges facing businesses in general, Nigerian businesses, from taxation, which is a very big issue, to general regulatory compliance. And then you now have the unique issue, I'm sure it's not unique to Nigeria, of multiple layers of compliance. Everybody everyone has a compliance agency, the other day, I saw that the Municipal Area Council has set up something on that deals with ride-share services. And I'm wondering to myself, is it the function of the local government, that's the municipality, to deal with ride-share services, or should it be at a state level? And is there even any legislation on this, and so on and so forth? But I think the presentations touched on these areas, but it would be good to see some more practical examples, and if we could use examples based on current, some of the popular fintech companies that we have, that provide services in the space today. But all in all, great presentation. I apologize once again for joining a little late, and fantastic conversation. It's a pleasure being on the same panel with Lucian once again. Thank you very much, Mr. Joseph. Thank you, Juliana, for the opportunity.
Thank you, Mr. Folari, for your comments. Your comments were very rich and very, I don't want to use the word localized, but down to the real issues that some of the concepts which have been raised here actually address. We would go very quickly to the questions, so we can take each question for, that's each of the mentors will address each of the questions, because we don't have too many questions. But I would add some additional questions that we can also take as well. So I think in one of the comments made by Mr. Folari, he addressed the issue of uniform regulation and his take on that. But I would also like to hear from Mr. Lucien on that as well. So I'll just read the question out. But before then, I would like us to take the pictures. We actually want to do that so that we can interact better with our audience out there, and also so that we can tag our mentors. You could also state what you've learned from today's presentation. So if you don't mind, if we can all switch on our videos, let's see our beautiful and handsome faces, and let's take a screenshot so that we can actually engage on LinkedIn and of course on other social media platforms. So please, I call on Jimobi, Oluwaseun, if we can have our videos on the next couple of seconds so that we can quickly just take a screenshot of everyone. Thank you, Jimobi, for coming on. We have Fatia and Oluwaseun, are you there? All right, so let's do the screenshot as quickly as possible. I think we have enough people now, but if others can join in, that'll be perfectly fine. I'm sure we are done with that already. Okay, Oluwaseun just came up. So if you can be stationary, Mr. Oluwaseun, just give us 2 seconds, just be on the spot. Yeah, if you don't mind. Thank you very much. Yeah, so this is perfect. We'll proceed further now to the questions. Thank you everyone for putting your videos on. Thanks a lot. So the first question is, how feasible is the creation of a uniform regulation on fintech policies? Is this something that fintech regulation should drive towards because of the Hydra-headed nature of fintech in itself? Is it something that domiciling that in one agency, would that help the cost of fintech? So I would like to take the comments of Mr. Lucien, and that's in the first instance, and thereafter Mr. Folari. So Mr. Lucien, the floor is yours. Thank you.
Thanks a lot, Mr. Joseph. Yeah, it's a really difficult one. When I visualize a single all-encompassing law or regulation for fintech, I imagine something, as you say, of this multi-headed monster, given the fact that it's going to need to traverse so many different areas of law, because you have so many different types of fintechs, the way they offer their services, where they are located, some which involve much higher risk in terms of the consumers as far as privacy and other rights are concerned, potentially even losing money. And you know, if I have to think about it, if you have to cram all of that into one piece of legislation, as Mr. Folarin said earlier, it's going to potentially be full of holes. And my approach and my recommendation would be rather, if you are going to do something, it should be something that is very neutral and perhaps, when I say neutral, technology neutral, service neutral, and touches on the very basic aspects that fintechs would typically deal with. And I would then expect it to rely on other more mature, thorough pieces of legislation that have been through the mill, that have been challenged and that have been perfected. You know, you might have competition related issues. Let that be dealt with under your Competition Act. You might have consumer protection related matters, and your Consumer Protection Act would have been challenged and amended and taken to court. And, you know, it's been through the mill and it is in a far better state now than, you know, potentially when it first came out. I know with us, our legislation is challenged time and again, and eventually it reaches a point where it's relatively solid and there aren't many holes in it. So my view is that a single piece of legislation, I don't think that could work. My preference would be that an obligation be placed on the fintech itself to ensure that its services are in accordance with whatever laws might apply to it. And as I said, you know, whether it be tax laws, whether it be privacy laws, whether it be competition laws, whether it be consumer protection laws, it needs to take into account whether it is complying with those laws. You know, Mr. Folarin mentioned the fact that consumers need education about the services that are being provided so that they're not led up the garden path and find themselves in a situation that they cannot get out of. So I think, given that in most jurisdictions, you will have laws that cover many of the situations or scenarios that both the fintech and the consumer will encounter, that reliance should be placed on those laws, and that a fintech be expected to ensure that its services comply with each of those laws, whether it be banking, because you might need a particular type of license to provide the services. In South Africa, if you're providing financial intermediary services, you need a license for that, simply to just advise on finances. So there would be an expectation on the fintech, in my view, to comply with those laws. I think you would be digging a really deep hole if you wanted to draft a single piece of legislation that would cover every single scenario. I think that would be, you know, exposing the state and that piece of legislation to a lot of challenge. And you'd find people who've got resources briefing very, very good lawyers like yourself, like Mr. Folarin, to spend lots of time in court challenging the legislation and taking it on. So my preference and my leaning is towards relying on existing legislation and perhaps having a very light, high-level piece of legislation that touches on very specific aspects of fintechs and similar providers. Yeah.
Thank you so very much, Mr. Lucian. We'll go right straight to Mr. Folarin on his comments as well. Mr. Folarin, are you there?
I'm here. Yeah, so I also, once again, would have to agree. I think Lucian really has covered the field. And I do apologize for, it may seem I may have preempted the question. It definitely wasn't my intention. But I think I pretty much shared my thoughts on the topic, in the sense that it's a hydra-headed space, because there are quite a number of there are so many possibilities in terms of the types of services that are bundled together, the types of services offered to the public, you know, some of which I think we had a session that addressed legal issues in the fintech space at the Abuja, at the, our bar association, during our bar association week. And a fintech proprietor, founder, one of the founders who attended, was complaining that the CBN had prescribed a minimum share capital for those who wanted to operate in that particular sector, subsector of the fintech space, and was asking why should, a government agency prescribe a minimum share capital, and so, because the person is not a lawyer. So the lawyers in the house had to, advise that, for certain types of financial services, you must obtain a license, and one of the licensing requirements is that the company must have a certain floor as to a certain prescribed minimum share capital in the event that the company becomes insolvent or that it runs into some kind of trouble. But that's speaking generally, and that's one of the problems of applying a one-size-fits-all rule, which the CBN has done in the very recent past in terms of some of the policies that have been prescribed that even affect a company like, again, Aboki FX. And all Aboki FX was doing was just publishing the exchange rates, the actual Naira to dollar and the Naira to other currency exchange rates. And they were categorized as a FinTech company, and their accounts were blocked and banned and all that. So I think it may be troublesome or very problematic, especially in this part of the world, creating a one-size-fits-all rule. And I think one thing that we don't do, and again, I would salute, or I would defer to the IFWG, this working group that produced a report which I think took input from a very wide range of stakeholders within the industry. I think that's one area that is really lacking in our in this part of in our clients. I know CBAN, there are some groups that have tried to institute some self-regulatory mechanisms. I know CBAN, that's the Stakeholders in Blockchain Association, and a few other associations like that too. But it's important, our legislation, especially in this space, has to be driven by data, has to be driven by hard research, and there should be a lot of public sensitization and public engagement. It's not enough to have the best intentions. I saw, I think there was some news about the startup bill a little while ago, a couple of months ago. And I said to myself, why create a startup bill when, you have the Nigeria Investment Promotion Council Act, which already prescribes certain incentives for people who create, who work in pioneer spaces. So why not? Why don't we have a review of that act and an amendment to expand, the operation of that act? Because it still speaks to, when you're talking of tax holidays, you're talking of incentives, pioneer status, and so on and so forth. Those are issues that incentivize or that help actors in either new pioneer industries or in disadvantaged, quote unquote, disadvantaged sectors. So I think there is a lot to be said about driving our legislation based on research, as opposed to just jumping, which our legislature tends to do, rather unfortunately, jumping on current trends and bandwagons in the course of playing catch up. So yes, I would say that we should have a more robust conversation about around, let's say, conducting research, for example. We should do some research in this space first before we go guns blazing and proposing legislation. And I should also very quickly say this. There was something Lucien said about jurisdictions. Nigerian regulators are very jealous of their jurisdiction, and that's why one of the reasons why there was a ban on access to Twitter. People say, oh, there was no Twitter ban. The federal government cannot ban people or tell Nigerians you should not go to Twitter. No. Freedom of the rights, our fundamental rights, cannot be infringed upon by government. What the federal government did was to block our ability to go to Twitter through, state-provided channels. And so people downloaded VPNs. But the point I'm trying to make is that regulators are very jealous of their jurisdiction. And there's always this attempt to bring in or to draw in actors who make money from Nigeria, but Nigerians, but are outside the shores of Nigeria, to draw them in, But I find that one finds that there's a dearth of financial opportunities in the country. Our financial market is not as robust as it should be, and I'm talking of the traditional financial market, in the sense that the capital market is what it is. I think for a couple of years at speaking engagements, I would ask people in the audience or in the class to indicate by show of hands how many people own shares, and the numbers are dropping drastically. I think on the average you find less than 5% of any group, especially with a demographic. With a higher demographic of younger, adults, but you find less than 5% of any group indicating that they own shares or that they buy shares or that they trade in shares. So our capital market is down. The commodities market also, has been hit by inflation. Let's just say our financial market is number one, is not as robust as it should be. But then even the existing infrastructure is just is hanging by a thread, and so because of that, people tend to look for other avenues to put, to invest money into, and what we then tend to find is that you have companies like the famous MMM, with offices abroad, or in Barbados or in some other parts of the world, cheating Nigerians, taking advantage of Nigerians, operating Ponzi schemes. That's what leads to people falling prey to Ponzi schemes. And I think that is a conversation that we should have very urgently, because the failure, or I don't want to sound too bleak, but the fact that our financial markets are not operating at peak capacity, or that there is low confidence in the markets, is the impact of that is that people are then going to other sources, looking outside, and many times you find people taking this money outside jurisdiction, and it does have an effect overall on the economic health of the country. So, in response to the answer, should we have a one-size-fits-all legislation? I would say no. Nigeria has we have more than enough legislation that deals with all the corporate governance issues and many of the sectoral regulatory issues. I think legislation, if any, in the fintech space should be driven by, there should be a lot of public engagement, first, before any form of legislation is proposed. At the moment, the licensing regimes are a little harsh, because they also operate like some sort of, even though there should be subsidiary legislation, but they operate almost with the full force of actual legislation. And I think it has a very hard effect. A company that just supplies information will be hit with the same sanctions as a company that is engaged in crypto trading or foreign exchange trading. So those are my thoughts. Thank you very much.
Yeah, thank you so much, Mr. Folari. Well, the second question we have, I think from the comments you have made on this first question, I can almost tell where you stand on question 2, but I would still like to give you the opportunity to respond to it. It necessarily might not relate to what Mr. Lucien might want to add, but he can also give us his own view as well. So it has to do with what is the best way to fast track getting presidential assent for good bills, in quotes, like the startup bill in Nigeria and the anti-counterfeiting bill. So, Mr. Folari, let me just give us your take very briefly before we go to other questions I've outlined.
Okay. So with regards to the ACC, I've followed the ACC for at least a little over a decade now, the anti-counterfeiting bill. I think we have, so I'm not very confident in our legislature, and but I am stuck I'm trying not to sound like a pessimist, because I'm not really a pessimist, but it's hard to have these conversations without, coming off as pessimistic. But I would say that number one, the anti-counterfeiting bill. So let's first say that in 2015, I think somewhere around May, in May 2015, the then president, past president Jonathan, Goodluck Jonathan, passed a large number of laws. He signed a large, or assented or signed a large number of laws bills into law, and many of them. I, for one, was surprised that at the eve of the administration, more than 20 bills were signed into law. It really does. It's very concerning, because you find a lot of them were rushed, like the Administration of Criminal Justice Act that I mentioned, that does not provide for appeals from certain types of courts. Such an oversight, almost it should be, is something that we should be ashamed of saying, in public, that you have a law that doesn't address a criminal law, that doesn't address appeals from a particular court, and one of those laws is the Cybercrime Prohibition and Prevention Act, which also tends to affect cyberspace, in a very huge way, and is also one of the laws that fintech companies in Nigeria, have to battle with. But then there's also that question as to whether the National Assembly even as a federal legislature, has the legislative competence to legislate on information technology in the first place, and so I would say that the issue shouldn't be about, of course, now we're talking about the speed of presidential assent, because we have a president who, in local parlance, was once called Baba Go Slow, which means, he doesn't act as fast as people, as situations often demand. And so I understand the question about, speed of assent, but really, I think there's a huge rush. There's a copyright bill that has just passed, has gone on for assent, which is an amendment to our Copyright Act. But I can say for free that this particular copyright bill, has been in existence for about 10 years. It's been in the legislature, it's gone from one legislative house to another, from one administration to another for 10 years. And there hasn't been a commensurate engagement with the public, especially with those who create and use, works that are protected by copyright. And so the problem then is that because there's little public engagement, especially with professionals, we should call accountants, there should be a very robust process. Because there's little engagement, the laws, when they come out, become more of obstacles, than solutions to many of the problems. And some of the problems that they seek to solve are already, may even be dated. Like the anti-counterfeiting law or act. We already have a Copyright Act, which deals primarily with issues surrounding counterfeiting, not in general, but at least from the copyright perspective, it deals to a large extent with issues around counterfeiting. But then you have the Trademarks Act, which also, and the Merchandise Marks Act, which also deal with counterfeiting, from the trademarks point of view. So the question then is, do we need a new act, a new bill, or should we rather not look at the existing legislation and amend? And that still goes back to this issue of stakeholder engagement. While I was chairman of the Bar Association here in Abuja, I was contacted by I was contacted by a member of the, I don't know if I should say this openly, but I was contacted by a member of someone from the legislature, and they told me, oh, we intend to hold a public hearing for people on this particular issue. That what we'll do is we'll invite you and a few of your members to this place, and then we'll say that a public hearing. You guys will give us your recommendations, and we'll say a public hearing was held. And I said, N to the O, no. You should have an issue as sensitive as this. You should have public hearings, and you should not just do a public hearing in Abuja. You should have public hearings across the country, not just in geographical zones, but in every state of the country. And probably even in every local government or in every state capital, we should have very widespread conversation. We should go to social media, use social media, engage people in the village who don't have access to social media, and so on and so forth. And of course, this person ran away from me, but I told him no, that we will not put the bar's stamp on such a process. And that bill never made it out of that administration, and rightly so. So I would say that I don't think the issue is with ASCENT. Look at the Companies and Allied Matters Act, 2020, when it went through a very robust process, fairly robust, and it went on for ASCENT. But when the law was passed, or when it was assented and it became law, there were issues surrounding, which version was sent for assent, which version was agreed upon, and then there were some controversies about certain sections that were quote unquote smuggled in, after the public stakeholders engagements had taken place. And so these are, especially now, if we're talking about the fintech space, these are issues that one shouldn't play Russian roulette with. And so yes, my take would be that we should focus less on the presidential assent, because again, the legislature, in actual fact, the legislature should represent the will of the people. And when the legislature speaks, by either getting a bill or passing a bill, proposing a bill to be passed into law, it should represent the will of the people. And the president is just one person, who probably doesn't know anything about the subject matter of the bill, and is advised by the Attorney General. But that legislative process should represent the will of the people. And I think to a very large extent, we've not even gotten that right yet. I think the focus should be on that first.
All right, sir. Thank you so very much. I can see that Mr. Lucien wants to respond to your comments. Please go ahead, sir.
Mr. Polarin, I was going to say, don't feel too bad. We have our Data Privacy Act here called the Protection of Personal Information Act. It was a white paper when we first started working on it in 2003. It was assented to in 2013, but not made fully effective, and only became effective in 2021. So that was almost 20 years. Don't feel bad.
You see, some of these challenges have more like a cross-border application.
Yes.
I think anywhere we find human beings, there might be certain aspects of delays and all that. But I want to just quickly take us straight to licensing. For example, somebody wants to start a fintech company, and the person requires certain form of a license to operate. It's obviously so that getting some of these fintech licenses to operate either from the Securities and Exchange Commission or even from the Central Bank of Nigeria, as the case may be, is something that is really Herculean for a whole lot of startups. In fact, that's at one point where a lot of dreams actually just end. Those dreams don't move beyond that idea phase. Somebody has a brilliant idea, but he has to contend with all the regulatory requirements that are almost impossible, to meet up to. I've seen companies actually fail 101% of the time as a result of some of these very stringent principles. So I wouldn't know, is there a way we can go into the mind of the regulator to see why some of these things are the way they actually are? Because I know that, for example, in Brazil, if you want, if there are certain licensing regimes in Brazil, for example, especially with fintech, the banks have their own licensing requirements. So fintechs that want to disrupt the banking system, they are given a lesser, they have a lesser requirement to meet up to. I haven't seen that as well, fully implemented in Nigeria. So I would like to know, Mr. Lucien, can you give us a feeling of what actually takes place in South Africa with respect to this? Or is this globally acceptable? Because the licensing regime, basically, I think it's really harsh for a lot of startups who don't even have the funding for anything, and you now give them a whole lot of requirements to meet up with?
Yeah, I certainly think the difficulty of entering the fintech space, particularly where you stray in the direction of almost providing banking services, is highly regulated, and the barrier to entry is very high. It's quite similar in South Africa, although I would think, given your description, we are slightly closer to the Brazilian approach. As far as fintechs are concerned, for example, a fintech that might want to operate in the remittance space, we have various levels in South Africa, which are dependent, or I suppose I should say, which allow entry depending on the extent of the services and the risks involved. And the more risky the service you're providing, the higher the application fee or deposit would be for you to hold if you are providing these services. We have certain services where it is relatively easy to get in. It's not even for the average person, it's a huge amount of money. And essentially where you want to provide certain types of services in South Africa, transferring or assisting with payment services within the jurisdiction, you're likely to have to pay a fine of about, not a fine, sorry, have an amount available of about 2 million rand, which in US dollars is probably about a quarter of that, I think, or a third of that, 500,000, let's say 500,000. My mathematics, as I said, is terrible. 2 million rand. About 750,000 US dollars is what you would pay thereabouts. No less than that, 250,000 US dollars, I think. That's what you would be expected to pay to provide relatively simple payments within the jurisdiction of South Africa. And as soon as you enter into the space where you are doing remittances outside, international remittances, the fee or the security you're required to put up goes up to about 5 million rand, which again is probably, I don't know, you can calculate it. The exchange rate is 15 to 1 at the moment, 15 rand to 1 to $1. So you can see they make it quite difficult for you if you were a startup without any huge financial backing to get into this space. And similarly, when it comes to even something as simple as advising on how to invest, we have something called the Financial Intermediary and Advisory Services Act, which again requires somebody who's a financial advisor to go through quite a detailed vetting process and to have certain minimum qualifications, whereas in the past, anybody could sell you insurance. Now there are certain minimum requirements. So I think, depending on the type of service you're going to provide, if it does involve some financial risk and potential losses to consumers, then you're going to find that there, the barrier is quite is set quite high. But of course, it is staggered. So you can potentially get in with less risky services and grow from there. But it's not an easy space to get into if it involves some sort of transfers of funds and remittances and the like. For banks, it is a much, much higher bar that you have to cross in terms of regulatory and compliance and having minimum amounts of capital available, very much like we were talking about earlier. So fintechs, yes, sometimes it is very difficult to get into that space. And I empathize with many people because you come with a brilliant idea, but nobody wants to invest in you at the early stages. So yeah, it is sad because some ideas just fall by the wayside, as you said.
I don't know if Mr. Folarin can give us just a very brief background as to how that really applies in Nigeria. The only other thing I would like to add before Mr. Folarin comes up basically has to do with the fact that my own view of regulation basically has to do with Folarin mentioned something around regulatory engagement. we need to be able to see so much more of that, because much of the time the regulator might sit on the high horse, may necessarily not understand what the business side of some of those fintech activities might really be. So I feel that regulation should have a collaborative coexistence, so that the regulator understands what the companies or the fintech companies are actually doing, and they can better understand how best to regulate them part-time. Because if you do not take into consideration the challenges that some of these companies actually face, it might be quite difficult to really understand how best to intervene or to regulate the space. So Mr. Folari, if you're there, you can just quickly respond to what Mr. Lucien actually said in view of the question that was asked.
I actually agree with everything that Lucien said. When everybody is agreeing with you, then you know who the expert in the room is. I think in Nigeria, it's a little bit of the same. I think everything we've said, kind of comes together in the sense that I'm looking for how to start this conversation without, making it too wide. But our democracy is young, and regulation too is not so young, but relatively young, in the sense that we've not tried and failed in so many ways. Although we're not without our own share of failures, regulatory failures, but in terms of the impact of regulation on actual business, I think you find that the civil service regulators tend to regulate. That's their business, then the business of regulation, without much consideration as to how the numerous number of ways in which those regulations are impacting business. And what tends to happen in this part of the world is that there's a cat and mouse catch-up game that is played between business and the regulator, where you find a situation where business tends to flow, excuse me, in the area where there's less regulation. And it's just like the Christian saying that where there's no law, there's no sin. So you find people, capital gravitates in the areas where there's less stress. And Lucien mentioned the fact that if a fintech company is offering a service that has an element of financial risk, then there has to be regulation. There has to be some form of oversight. But the question now is, in the Nigerian context, what is the extent of that oversight? And so I was saying that capital tends to flow generally in most economies, towards areas where there's less registration, regulation, where there are fewer bottlenecks, and so you find a situation where, for example, selling information is one of the cheapest things to do in this information economy. So you find people blogging, find there's been a boom or a growth of people who operate in the information space, Gistlover, the bloggers, and so on and so forth, content creators who create content online, But imagine a scenario where, and I'll go again to what the Central Bank of Nigeria did, with, and it's still that same one-size-fits-all, rule approach. Categorize it's practically criminal to categorize a company that provides information, with another company that probably operates a payment portal, for example, or provides a platform for trading in either forex trading in currencies or whatever. It's almost criminal, and that is the challenge that I think that we have. It's a challenge of our time, if you may. But I would also say that looking at South Africa's, from what Lucien mentioned about the time it took for the privacy and the communications bill, you know, from when the engagements were had to when the actual legislation was passed or became law, you know, you can easily argue that there was a lot of time for public conversation, for engagement. I'm sure the issues that have been discussed robustly, you know, on all manner of platforms. And so legislation would naturally follow what the people want to match the temperature of the aspirations of the people. And of course, it will also curb contemporary challenges, you know, what you may call things that should be categorized as crimes and offenses. In contrast, without that process here, you know, what tends to happen is that you may end up having a dated legislation. Like, I'll give another example. I mentioned the Copyright Act, the Anti-Counterfeiting Act bill. If you look at there's a trademarks bill that is being proposed. That is, you know, an amendment to the Trademarks Act. That amendment, it's called the IPCOM bill. The amendment it's been going to and from the legislature since the late 90s, you know, without much improvement, you know. And so you have a situation where there hasn't been much public or stakeholder engagement. There hasn't been much discussion on the subject matter. There hasn't been, you know, it hasn't been in the news. And then you have a situation where a bill that was, for whatever reason, you know, in a hurry is passed. It does create, it will create problems, you know. And that's, so again, is this issue of stakeholder engagement, engaging the public, whether it's for legislature or for the regulators, you know, as administrative regulators. One thing this administration, that's the administration of President Muhammadu Buhari, has used or has done is they have publicized the use of executive orders. And the vice president used that to kind of reduce some of the bottlenecks in regulatory bottlenecks relating to the ease of doing business in Nigeria. We find, you know, the executive orders 2, 3, 4, you know, are all targeted at improving local content and reducing the bottlenecks of making it easier to do business in Nigeria. You know, the objective again is to draw in to draw in foreign direct investment. But then these executive orders are applied by the regulatory bodies almost as if they are, you know, laws made by the legislature. And while some of them, very well intentioned, have had positive impacts, you know, on the various sectors, some have not had the same impact. And I think the underlying thread is that there is the policies are not really built on sufficient stakeholder engagement, you know. And so I would say that in this case, if the mountain doesn't go to Mohammed should go to the mountain. So it's not enough also for those of us in the private sector, you know, to sit back and say, oh, legislation, the National Assembly should reach out to us, or federal legislature should reach out to us, or state legislature, we should wait for them to come. It does help when we engage them, you know, by participating in what's it called, public hearings, or even demanding that public hearings should be held, you know, across all the various platforms that exist today, you know. And I think that's also one way that one can be proactive with this sort of engagement, you know, so that we don't just sit back and watch as they make some of the mistakes, and then it's the people that now live with the consequences of those mistakes.
Yeah, thank you so very much, Mr. Folari. Your contributions are always meaningful, and it's more of, it gives some of us opportunity to go back and keep researching, especially as it has to do with the practicalities of your views within the Nigerian space. Well, we are almost rounding up, and one of the last things I would like to say basically is from the innovation side of things, I feel that there is more need for our regulators to balance regulation with innovation, because more often than not, governments are finding it more difficult to provide employment or jobs for a whole lot of people. So you now find out that a lot of young people within the FinTech or startup ecosystem are actually doing the best that they can to come up with innovative ideas upon innovative ideas. And at the end of the day, those ideas are now subject to regulation in a way that you can have all the innovation in your mind. And at the end of the day, because of the requirements of regulation, your idea would necessarily not even leave your mind. Or you now find a case where entrepreneurs now begin to look for back channels to push their innovation to a point that they are not within the radar of regulation per se, especially within the early aspects of them trying to launch out their business. So it's a good time for the regulators to begin to have that conversation. Where do we draw the line, especially for smaller entrants into that FinTech market or smaller entrants into that regulatory space? So this is just food for thought for me personally and for all of us here on the JIIPCC Mentorship and Internship program in FinTech. So on the final note, I want to say a very big thank you to our mentees. The Group 1 and Group 2 presentations were really magnificent. I would appeal to us to dive deeper, especially if you really want to engage within the FinTech space. You really need to understand how much of all these issues actually work. And I would also say to our mentors, thank you so very much for being part of today's program. It was very enlightening. We can see that regulation is something that you can't run away from regulation as far as FinTech is concerned. So thank you, Mr. Lucien. Thank you, Mr. Folarin. I saw Mr. Lucien's hand go up. One more word to share.
Oh no, I was complimenting the groups on their presentations, which for me, you think you're benefiting from me, but actually I think I'm benefiting more. So I'm very grateful to both groups for what I've learned today. But well done to both of you, really excellent work. Thank you to yourselves, my colleagues in Nigeria. I always enjoy these interactions, and I look forward to future ones. Mr. Joseph, Juliana, Mr. Folarin, Hussein, as always, it's been a pleasure. Thank you for the invitation.
Thank you very much, Mr. Lucien. Thank you, Mr. Folarin. Hussein, thank you for standing in and doing a great job. We see what you're doing, and thanks a whole lot. And to our convener, Juliana Imam, thanks a lot also for all that you do for the sleepless nights. I know Hussein too is having it quite hot as well in trying to keep up with the tempo and all of that. So your good work is very much appreciated. And I would want to appeal that we try to share as much as we can. Let us go back on LinkedIn and also social media platforms to tag our mentors. Just say one or two things that you've learned. And one thing, you would think you've actually heard everything that was said on this particular episode, but I would advise that if you can go back, much of the time, the question and answer sessions are very rich in terms of the information that we actually need on our journey within the FinTech space. So finally, thank you everyone for being part of today's session. And I hope to see us all in good health next week, Wednesday, same time. Thank you very much. Have a very wonderful week, everyone.
Thank you all. Bye.